Hey, this is Matt from InvestiQuant. Today is Thursday, February 11th, 2021. Yesterday, we saw volatility come back into the market for the first time in a couple weeks. We ended up with about 48 points of range in the S&P. Volume finally picked up after it had gone quiet for a couple weeks. And we had what's called a bearish outside day. And the bearish outside day is a candlestick pattern where the high of the day is greater than the prior day's high, and the low of the day is less than the prior day low. And then the part that makes it bearish is the fact that it closes below the open. So it's a red candlestick that has a higher high and a lower daily low than the session before. So what we're going to do this morning is take a look at that type of candlestick pattern in a bullish environment like we are in. We're going to go ahead and add that we are trading up in the pre-market ahead of the open to that pattern and see what it has led to historically. So let me build it out for you using all four instruments. The setup is based upon entering long at the open of regular trading hours, which is 9:30 a.m. Eastern time. The exit is set to 4:15 p.m. Eastern time, so it's holding for the entire session. Next, I'm going to go into the opening filters, and currently in the overnight session, we are starting to push higher. We are starting to retrace more of that move from yesterday. So I'm going to go ahead and select gap up, which means that the opening print is above the prior day closing print. Next, I'm going to add that bearish outside day pattern. Now, to do that, I can do it several ways within here. The easiest way is just go to the active today's section and click on the candlestick pattern day after bearish outside day, which is right here. I click on that, it adds it to the test with one click. Otherwise, I can dig through this candlestick library, and there's a bunch of them in there that are pre-built for you, and I could add it that way as well. But I've already got it with the active today click. Now I can go into indicators, click that we are above a 200 and a 10-day simple moving average. So I got both of those added here. Now I can click view result. And here we go. These are the results of going long at the open of regular trading hours, which is 9:30 a.m. Eastern time, and exiting at the close of regular trading hours, which is 4:15 p.m. Eastern time, when you are gapping up following a bearish outside day candlestick pattern. This is taking place above a 10 and 200-day simple moving average. Now, historically, the S&P has seen this pattern take place 68 times dating back to 2003. The NASDAQ has happened 85 times, the Dow 53, and the Russell 60 times. If we look at the win rates on these, you'll see that they are mostly above 50%, with some of them a little bit stronger, including the Dow, which has been really consistent on this pattern for whatever reason. But the S&P is coming in at 60% winners, so 60% of those 68 samples have historically closed above the opening print for that session. The NASDAQ's more neutral. It's coming in at 53%. The Russell is kind of neutral as well, just a little bit over 55%, coming in 56.6. And Dow, the leader of the group, 74% of those 53 samples have ended up with a green daily candlestick, where the price is closing above the opening print for the day. So there's a lot of different edges for the Dow where this outside day is quite bullish. I've ran into this in a lot of my studies, so I don't know exactly why the Dow is so strong with this pattern, but it is, and there are a lot of different variations that you can kind of dig into if you want to try to build a strategy off of this pattern. There's a lot of good stuff in the Dow. That's where I would point you to look. If we look at the average win, average loss, they are fairly similar there for the S&P. For the NASDAQ, the average win is a little bit bigger. Average win, average loss size is pretty similar in the Dow, and then the Russell, the average loss has been a little bit larger. Let me go ahead and hover over these equity curves, at least over this Dow one, because that one was so strong. If I hover my mouse over the green, you can see the Dow equity curve there, which is really smooth to the upside. It's got a little blip there in 2018 when we had some volatility, but other than that, that is a pretty smooth looking equity curve. And again, this is end of day, so it's not necessarily something that would be considered a trading strategy for you, but it could be something that could lead to a trading strategy that you would build. So it could be the driver behind it if you wanted to really dig into something. So that's the Dow. You can see these others. Here's the ES. It's been pretty strong here since about 2008. It started taking off to the upside. The Nasdaq's not been very consistent at all. Very erratic looking equity curve there. And here is the Russell, which has been pretty flat, and that goes along with those stats that are pretty neutral for the Russell. So hopefully you found that helpful. Good luck today, and we will see you next time.